Hello everyone, my name is Siddharth Khemka and I head the retail research at Motilal Oswal. We will take you through the quick update on the markets. Equity markets cheered the movement done by the government on the fiscal benefit that the government has provided by cutting corporate tax from a base rate of 30% to a base rate of 22%. The market has moved up by almost 9% in the last two trading sessions after this announcement. The market believes that this will go a long way in providing the much needed boost to the economic growth which was languishing so far. Coming to the developments, the government has proposed to lower the corporate tax rates for all domestic companies from current 30% to 22%. Including the cess and surcharge. This will come to around 25.7%. This is much better than what the street was expecting in the budget, when the previous government had promised to bring the entire corporate tax rate down to 25%. Further, government has given added impetus for manufacturing sector, for companies that are setting up new units on or after 1st October 2019 and starting production before March 2023 will be offered a much concessional tax rate of 15%, which will go a long way in not only attracting foreign direct investments but also the private sector into manufacturing, which is the need of the hour. Some of the sectors that we believe will benefit from the tax rate cut would be banks, consumer sector including FMCG, some of the cement players and some of the auto names. IT is one sector which will not benefit much from the current change in the tax regime. This we believe is a big structural reform that will help not only boost investments but would also drive the consumption as well as the employment in the economy. Going forward, the market will look forward towards the RBI policy meet, which is scheduled on October 4th. RBI has been having an accommodative monetary policy and we expect RBI to cut the interest rates by another 40 basis points, looking at the weak economic growth and the benign inflation environment. Further, the market would also take cues from the global markets, where the geopolitical tension increased in the Gulf region, which led to sharp volatility in the oil prices as well as currency, which would provide further cues. Back home, the FNO expiry is there on Thursday, which would be a very important event given that the index levels have moved up sharply in the last 2 days, and hence the rollover data would be very important for the market movement going forward. Thank you.